Welcome to Ty's Daily Market Update. It is Monday, August 10th. So, Trump signals restraint on Iran favors economic pressure. The president has signaled he's prepared to let economic pressure on Iran build rather than launch fresh military strikes to force a reopening of the strait, because essentially that hasn't worked. The IRGC, which controls the military and looks like it controls Iran, it's too widely distributed. They've hidden missiles and drones and in different places, so they don't care if the civilians get hit. I think it's too hard without a ground invasion, which I don't think the president is willing to do, is certainly not ready to do, to be able to stop it. So he's saying, you know what, I'm going to wait. And he says, we are just watching Iran with its huge inflation. Remember what he just posted? And the fact that they have no money, Trump told Axios in an interview on Sunday. We are low-keying it. Now, over the weekend, it's sort of the positions reversed. The Iranian foreign minister said a pact with Oman to establish a shipping route through the strait is very close, without providing details on the substance. Really has reversed. Now, the president's comments mark a shift from his repeated threats to escalate the bombing campaign against Iran and come amid lingering talks between Tehran and Oman to reopen Hormuz. Iran has said it's nearing a deal, but laying out this list of demands. The Islamic Republic's economy is taking a hammering from the war, with much of industrial capacity destroyed, crude exports basically shut, and inflation year on year showing 77%. We saw 100% in the last 18 months. So now the inflation that caused huge protests early in the year before the U.S. And Israel started bombing. And there are no signs right now of anti-government demonstrations resuming because of the violence with which they put it down. It was really like Tiananmen Square. So I think Trump is saying, okay, guys, you can keep talking. Now, I'm not going to do anything. But I would expect, if nothing happens, if the U.S. says, I'll sit and starve you out, that you will see more Houthi attacks on Red Sea oil shipping from Saudi, because Iran is going to say, well, we're going to have to try to make the oil price even higher to push the Americans into capitulating. So the Telegraph said Israel rejects Trump's Gaza plan. The Prime Minister Netanyahu has rejected the peace deal in Gaza, suggesting it would turn the enclave into Hamastan, and says to the cabinet, Israel does not accept the 15-point document. The IDF will not carry any withdrawal until Hamas is disarmed. I mean, that's all weaponry. Now, this is a little problem, because I think he's been forced to come out against Trump, and Trump just doesn't like that. Maybe Trump will just ignore it, but Netanyahu is facing a strong challenge from in the upcoming general election and needs Trump to back him. But withdrawing from Gaza after what happened on October 7th, 2023 could be electorally even more damaging. So you can see that he's playing towards the election as well, because as long as he's prime minister, they probably can't prosecute him or put him in jail. Now, Iran, Telegraph also reports that Iran names a price to reopen the strait. They want financial compensation, and this is going to be problematic. Even though the earlier memorandum of understanding says it's not reparations, but it will release some of your frozen assets to you, which is a different thing, because there's no way that they get reparations, so they may sell it as such, but the U.S. taxpayers will not be paying Iran anything. Now, U.S. officials told the Wall Street Journal that the U.S. president believes that once the strait is open again, America can surveil any nuclear activity from afar and take action if needed, so he walks away without a nuclear deal. I think that's going to be a problem, but I can't rule it out from Trump saying they don't want to do a nuclear deal. Fine, we'll do our nuclear deal. We see any nuclear activity, we bomb you. So the U.S., I think, is really playing for time, and here's why we can do it. Crude is up today about 4%, but well short of almost $100 over $100 in Brent. It's in the 80s, right in the mid 80s right now. So at the end of the day, it's not as low as it was before, but it's not at any serious. Doesn't look like it's about to explode. Gasoline and heating oil, we're getting a big pop on a Monday. Gasoline up 4%, diesel up 7%. That will eventually feed into inflation, but not really into core inflation, at least not immediately. And for the most important statistic, I think maybe for Republicans and for President Trump, gasoline prices at the pump. They are coming lower because they went up really fast because WTI rallied up to 90. WTI is probably around 80 right now, or a little above 80, but the price of gasoline from a high of up to 410 from 380 is now back down to $4. If this gets down into the 380 or perhaps even lower, I think Trump might be saying, we might be running a little short of some of the munitions. You shoot at us, you shoot at our allies, you shoot at some ships, we smack you. Otherwise, well, as we say in the options market, we earned a decay. We will sit here because we're just running the blockade, and your people are starting to starve, or things are getting really expensive. So let's see. Okay, shifting gears. Bloomberg reports that Intel is selling $15 billion in stock with the AI boom lifting demand. Their first sort of public share sale since it listed in 1971. So this isn't an IPO. They're just selling stock to earn $15 billion. They may have to sell it a little below market or right at market. The money will be used for general purposes intended to further enable Intel to pursue growth opportunities ahead. Now, the shares are up 160% this year. The market cap is $500 billion. I shouldn't say IPO. The share sale would be 3% of market cap. It's not very much. It's a good time to do it. And the good thing about an equity raise is once you've sold the equity and you've diluted the holders 3%, you don't have to make payments on it other than perhaps dividends on common shares, if even they're paying dividends. It's not like debt where you issue debt, you actually have to pay the interest, which could be more and more difficult. So I think this is a smart move. And selling shares to investors will further cushion a balance sheet that had become burdened from debt from turnaround efforts. The CEO made cleaning up Intel's finances an early priority, including getting a big chunk. I can't remember, it was $10 billion from the U.S. government, which is paid very handsomely for the U.S. government. They're going to use this cash to try to build up their role in the AI. They don't have AI-specific businesses capable of competing with NVIDIA and AMD yet, so this proceeds from the share sale will provide substantial capacity to fund AI foundry and other projects without adding leverage. Look at their chart. I mean, this was their the big gap, and we held that gap. The low this is around 80 right here. I think the low here was in the low 80s, and it's come up. It's consolidating happily between sort of the 50-day and the 100-day moving average. We don't know the timing, but this looks like a good time to do it. Okay. On the other hand, U.S. big tech is borrowing at a record pace, according to Global Markets Investor, which is on X. So Amazon, Alphabet, and Meta, the big three hyperscalers, have sold almost $170 billion of investment-grade debt so far in 2026, 400% above their combined issuance of $33 billion in 2025. Remember when Amazon decided they wanted to sell some bonds and the market got really excited because there isn't a lot of Amazon debt out there? Well, that was the tip of the iceberg. There's more debt now, and there's going to be more coming. Amazon now is $92 billion issued across 38 bond tranches. Google, $51 billion, and Facebook at $25 billion. The average maturity of this debt is long, 15 years. That is really quite long. Remember, the U.S. government's average duration is around 6 or 7 years, probably shorter now because we've been issuing so many bills, so it might be even 5 or 6 years. Alphabet just announced a new bond looking for $25 billion, just weeks after its CapEx triggered a steep stock sell-off. Big tech expected to spend more than $730 billion this year, primarily on AI, but now it's increasingly funded by debt than their cash reserves and the money that they're making. So basically, they said the AI spending boom has become a debt finance boom. A little clickbaity, maybe not quite yet, but they're doing more with that, as well as using retained earnings. Here is what it was the last hyperscaler IG bond issuance full year. You can see they issued bonds, not too much, a huge jump here. We have it for the rest of the year, and then again probably next year. Now let's look at the Fed. Fed Watch. The hike probability change on the week from Friday. Friday there was a 56% probability the Fed doesn't hike. Now it's a little bit more of a coin flip. It is too high. With the payrolls report that we got on Friday, unless CPI is very, very high, there is no way that this Fed will want to hike in September. There's no reason for it. what do we have for day to day? Well, ADP, the weekly tomorrow was important, but that's why I thought the number was going to be soft, because that had been 30, it trickled down to 20. Tomorrow it's expected at 15. We'll watch this for sort of ongoing clues before we get another employment report in a month's time. And then Wednesday is the big one. Core inflation, previously flat, consensus of 0.2. Let's see where we come out here. That will help determine sort of at least the short end of the yield curve for the next few weeks. And then of course we have the usual oil stocks and gasoline and distillate gaining importance, because if we're going to sit and try to wait out Iran, how much oil we have available, gasoline, distillates are important. Okay, where are the markets right now? Well, energy is jumping, as we mentioned. Stocks, bonds are a little bit lower, but not dramatically. Stocks are a little bit lower. Gold and silver are steady, and crypto is backing off. They had some nice gains at the end of the week, last week. Okay, NASDAQ 100, sort of a little sideways after this big pop. You could definitely see a correction down about 1% or so to the 50-day moving average, even a little bit beyond it. That seems to be potentially the next move. The S&P 500, sort of same thing. Big tech's a little soft today. Tech is down 0.7%. Energy is up 3% on higher crude and products. So I think the market is building sort of a tactical short here. They think this may be too much, because this was all situational awareness, the reaction to that. Are we really a little too high here? I think the smart guys are saying, let's be a little short, looking for a bit of a correction. But if CPI is weak again, you could see another leg higher, and I think that would be I think the downside is perhaps the likely side, but the surprise would definitely be a run higher. Gold. Well, the smart gold bugs are screaming right now. This is the beginning of a new move. We're going back to 5,600. We're going to, some people said we're going back to 10,000 now. They draw this chart that we just broke a trend line. Well, they really, really want it. Upward is definitely the path of least resistance. So, unless we get a strong CPI, and then that will, I think, force a sharp correction. Look at the gold miners. It's gapping higher. So really, the smart gold bulls are really, really pushing for it. You can see it particularly here. Okay, and then for the end of the week, we have core PPI, but really PPI on Thursday, but CPI is more important. We have jobless claims and retail sales and consumer sentiment on Friday. Thanks for joining me today. I'll see you again tomorrow.